Assalamu alaikum and hello everyone. In this lecture, we will prepare a statement of cash flows with detailed activities. We have a very detailed data of operating activities, investing activities, and financing activities. And we are going to use direct method for operating activities. We are using financial and managerial accounting by meigs or Williams Haka Bettner, covering chapter 13 and problem 13.6a. So here you have the problem in front of you. You can see that income statement is given. An income statement, we have revenues. In revenues, net sale, interest revenue, and gain on sale of marketable securities given. So this is gain on sale of marketable securities. This is your non-operating gain, and then the cost and expenses are given: cost of goods sold, operating expenses, and operating expenses including depreciation expense of 150,000 dollars. And we know that we have already discussed in our all previous lectures that depreciation is a non-cash expenditure. Then interest expense, income tax expense, and the loss of sales of plant assets. So the loss on sales of plant asset is again is a non-operating loss. So this is also given, and here we have net income. Then you can see additional information. In additional information, from additional information 1 to 6, the changes in working capital is given. That is, there are several current assets. So these are increase or decrease. And then we have current liabilities. So increase or decrease of current liabilities are given. Then we have other data. You can see that we have several debit entries and credit entries of balance sheet accounts. So these are the balance sheet accounts in which we have marketable securities, which is your short term investments. Then we have notes, receivables, that is cash loans made to borrowers. We have debit entries and credit entries. Plant assets are given debit and credit. And for the detail of plant asset, we have paragraph 8, in which you can see that $36,000 in credit entries to plant asset account is net of any debits to accumulated depreciation. So whenever we sell any asset, then the asset we record asset on the credit side, and all accumulated depreciation related to that asset on the debit side. That's why this 36,000 represent net of accumulated depreciation from plant asset. So this 36,000, this means that this 36,000 represent the book value of all plant assets sold or retired during the year. We know that book value arrive after deducting accumulated depreciation from the cost of the assets. So that's why this 36,000 represents book value of plant assets. Then we have a notes payable and capital stock is there, and additional paid in capital. This is the premium while issuing new shares or share capital. So issuance of share stock, capital stock is $20,000 with the premium on it, which is $160,000. Then we have retained earning, we have debit balances and credit entries, debit entries and credit entries. So for retained earnings, see paragraph 9, in which $120,000 debit to retained earning represent dividends declared and paid during the year. So this is the cash dividends. And 260 credit entry represent the net income shows in the income statement. So we can check yes. You can see that net income is $260,000. So this is the net income on the credit side of retained earning account, and debit side is 120,000, which is here in point number 9. It is indicated that this 120,000 represent dividend declared and paid. So this is the cash entry related to the dividends. Then there are instructions, and for requirement a cash flow statement is required by using direct method for reporting cash flows from operating activities, and these are supporting calculations or workings from requirement number 1 to requirement number 8. You can see cash received from customer, interest received, cash paid, and so on, and show separately your computation of the following amounts. So first of all, we need to calculate all these accounts or amounts separately before preparing the statement of cash flows. So first requirement here, now we are going to find out these amounts from 1 to 8 one by one. So first requirement is cash received from customers. So working one is total cash received from customers. So first of all, we have credit sales. This is credit sales are our starting point for cash receipts from customers. So credit sale total net sales is 3.2 million. So net sales dollar 3.2 million. Then we can see if there is any increase or decrease in accounts receivable. So here you can see accounts receivable is increased by $60,000. So when accounts receivable is increased, this means that a portion of sales revenue reported during the period has not been collected in cash. That's why in order to get actual cash received from customers, we deduct any increase in accounts receivable. So what we are going to do, we are going to deduct increase in accounts receivables. So first step, and how much the amount is, you can see $60,000. So we are going to deduct dollar 60,000 in order to get total, you can say, cash receipts from customers. So here we have total cash receipts from customers. So this is our first calculation or first working that will be required in cash flow statements. The working two. Second working is interest received. So we are going to calculate any interest received, working two. So for interest received, the starting point is interest revenue, and interest revenue is given, which is $40,000. So this $40,000, here we have interest revenue, which is 40,000. And we are going to adjust if there is any increase or decrease in accrued interest receivable. So we can check it here. This is the additional information number 2. Accrued interest receivable is decreased by $2,000. So this means that if there's any decrease in the accrued interest, this means that in simple word you can say that a portion of interest income has been collected. So to calculate the actual interest income, we simply add this amount here. So now what we are going to do, we are going to add any decrease in accrued interest receivable. So the amount is 2000. So $2,000. So our total or net interest received would be $42,000. So here we have interest received, which we are going to present in the outer column. Then we have working three, which is related with the cash paid to suppliers and employees. So this is one of the longest workings or calculations while preparing cash flows from operating activities, because it has so many adjustments cost of goods sold or increase or decrease in inventory, then accounts payable, and then operating expenses, including depreciation or any prepayments and so on. So, working three, which is related with the cash paid to suppliers and employees. So, first of all, we have cash paid to the purchase of goods. Cash paid to purchase of goods, and for this we have a starting point of cost of goods sold. So the total cost of goods sold is, you can see the income statement here, we have 1.62 million. So take it in the inner column, which is $1.62 million. Then we adjust any increase or decrease in the inventory. So you can see that inventory is decreased by $60,000. So inventory, if there's any decrease in inventory, which means that the company has sold more goods than it purchased during the period. So in order to calculate the cash paid for inventory, we simply deduct the decrease in inventory, because it reduces the need for additional cash purchases. So simply inventory is decreased by 60,000. So we are going to deduct any decrease in inventory, which is by 60,000. So dollar 60,000. The next is and the next adjustment is to adjust any decrease or increase in accounts payable. So what we have here, you can see accounts payable to suppliers is decreased by 16,000. So this means that if there is a decrease here, you can see the decrease in accounts payable. So if there's a decrease in accounts payable, which means that the company has paid off some of its outstanding balances to the supplier during the period. So in order to calculate the actual cash paid for inventory, we simply add any decrease in accounts payable to the cost of goods sold. So 16,000 is the decrease in accounts payable. The next step is we are going to add any decrease in accounts payable. So which was 16,000. So what we are going to do, we have 16,000, which we will add it. So the first calculation, you can see we have total cash paid for the purchase of goods, or by adjusting all these three, we get total of one fifth, you can say $1.576 million. So this we are going to present in the outer column. And then the next step in this statement is to calculate, is to add, in this working, is to add operating expenses or to calculate cash paid for operating expenses. So cash paid for operating expenses. Total operating expenses, you can see that 1.24 million, which is given in the income statement. So total operating expenses are here in the inner column, which is 1.24 million. Then we are going to add non-cash expenditure. We are going to add it back, which is depreciation. So add depreciation expense, which is $150,000. So we are going to deduct any non-cash expenditure, which is depreciation. So depreciation is a non-cash expense. So depreciation expense, which is, you can see, $150,000. So minus $150. Then we will adjust any increase or decrease in prepayments. So we can check if we have any increase or decrease in the prepayments. You can see that short-term prepayments of operating expenses are increased by $6,000. So if there's an increase in the short-term prepayment, so here how much it is increased, it is by 6,000. So any increase in prepayments should be added in the operating expenses. So add increase in prepayments, and these prepayments are for operating expenses, and the amount which is given is $6,000. So here we have $6,000. And in last, we can check if there is any increase or decrease in accrued liabilities for operating expenses. So here we have in point number 4, accrued liabilities for operating expenses are decreased by 8,000. So if we have any increase or decrease in accrued liabilities, so we are going to add any decrease in accrued liabilities, and this liabilities belong to these liabilities are belong to the operating expenses. That's why we are adjusting it, and the amount is, you can check, 8,000. So 8,000. Now we can calculate total cash paid for operating expenses. Here we have cash paid for operating expenses. You can check it, the total amount, which is 1.104 million. So what we are going to do, present in the outer column, and in the last, by adding these two, we can get the cash paid to the suppliers and employees. So we have cash paid to the suppliers and employees, which is total, which is the total of these two: cash paid to purchases and cash paid for operating expenses. So we have 1576, then we have 1104 triple zero. So here we have this amount, which is $2.68 million, and this is your total cash paid to the suppliers and employees. So this is our third working. Working number 4 is related to interest paid. Here you can see interest paid and income tax paid. So we have working 4, which is related with the interest paid. So you can check total interest expense are $42,000. So interest expense is the starting point. Interest expense, which is in the inner column, $42,000. We can check if there's any increase or decrease in the accrued interest payable. You can see that accrued interest payable is increased by 4 is increased by $4,000. So if there's a increase in, you can say, yes, increase. So if this means that if there's increase in interest payable, which means that, yeah. So you can see that in additional information number 5, the liability of accrued interest payable is increased by $4,000. So whenever there's increase in accrued interest payable, which means that the portion of interest expense has been recorded but not paid in cash. That's why in order to get cash paid for interest, we simply subtract it from the interest expense. So next step is to deduct increase in accrued interest payable. So how much increase is, which is 4,000. So what we are going to do, we are subtracting $4,000 in order to get total interest paid. So we have this amount, $38,000. So this $38,000 represents interest paid. The next working is working number 5, which is related to income tax paid. And the starting point is total income tax. So here you can see the income tax is $100,000. So we have income tax expense, which is $100,000. Now we are going to adjust if there is any increase or decrease in income tax liability, and we can see in requirement in the additional information number 6 that income tax payable is decreased by 14,000. So when income tax payable decreases, this means that the company has paid off some of its previous tax liabilities during the period. That's why in order to calculate the cash paid for taxes, we simply add any decrease in the income tax liability. So in the next step, what we are going to do, we are going to add any decrease in here accrued income tax payable. So how much is decrease, which is for which is 14,000. So add $14,000. So total um, income tax paid would be $114,000. So here we have total income tax paid. So this is working number 5, and all these workings from 1 to 5 will be required while preparing cash flows from operating activities. The next working is proceed from sale of marketable securities. So uh, we have gain on sale of marketable securities. We have this data, and then we can see that we have a debit account which is $60,000. So this is this $60,000 is you can say we have this marketable security 60,000, and then we have a credit entry. This credit entry actually represent the sale of marketable securities. So because we have gain on sale of marketable securities, here it is written in the income statement that this means that during the period the marketable securities were sold. So we are going to calculate working 6, which is related with the proceeds from the sale of marketable securities. Proceeds from sale of marketable securities, and the starting point we have you can say the book value or the cost of marketable securities, which is you can see here we have 38,000. So here we have cost of marketable securities, which is 38,000. And now what we are going to do, we are simply adding any gain in the sale of marketable from the sale of marketable securities. So you can see that we have $34,000 gain. So we are going to add gain on marketable securities, which is $34,000. So total cash received from the sale of marketable securities. So here we have $72,000 received during the period from the sale of marketable securities, because 38 represent the cost of the marketable securities, and then we added any gain. So this is the total cash proceeds from sale of marketable securities. So we have marketable securities. The next working, which is related with the proceeds from sale of plant asset. So working 7, which is related to proceeds from sale of plant asset, and the information which is given plant asset, you can say there's a credit entry which is by 36,000. Credit entry means because this is asset, so by nature this account is a debit account. Credit entry means we have sold or retired any asset. So here we have 36,000, and a hint is given in the paragraph 8. So this 36,000 in credit entries to plant asset account is the net of any debit to accumulated depreciation when plant assets were retired. So we have already discussed at the start of this lecture that this 36,000 represent net of any accumulated depreciation. So this is the book value. So we have the book value of plant asset, book value of plant asset that were actually sold. Plant asset sold. So we have $36,000, and we are going to less any loss which were here we discussed at the start, that loss on sale of plant assets. So here we have the loss of 12,000. So we deduct loss on sale of plant asset in order to get the actual cash received from the sale of that asset. So loss is $12,000. So we have actual receipts from the sale of that asset, which is $24,000. So here you can see this is proceeds from sale of plant asset. The next requirement is working 8, which is related with the proceeds from issuing of capital stock. So proceeds from issuing of capital stock. Here you can see that there is a credit entry. There are in fact two credit entry. One is related with the capital stock. So we have capital stock, or you can say simply the issuance of capital stock, which is $20,000. Then additional paid in capital. The additional paid in capital means this represent the share premium. So we are going to add share premium, which is related to the capital stock, which is $160,000. So the total proceeds from issuing of capital stock are $180,000. So here we have proceeds from sale of or from issuance of capital stock, which is $180,000. So these are the supporting calculation, and now we are going to prepare a cash flow statement, and this is our first requirement. Here you can see prepare a cash flow statement. Um, so we are moving these workings here, and we are going to prepare cash flow statement. So first of all, the name of the company is here. This is 21st Century Technologies, a cash flow statement for the year ended December 31st, 2011. Here you can see. Then we have, first of all, we have cash flows from operating activities, and with the help of first five workings which we have already calculated. Here you can see that cash received, interest received, cash received from customer, interest received. So these are two cash receipts, and then we paid cash to suppliers here, suppliers and interest and income tax. So we are going to calculate cash flows from operating activities. So first of all, we have cash receipts from customers, which is total. You can see here in requirement number, working number 13.140. So we have 3.140. Then we have here you can write workings as well, working one. Then we have interest received. So interest received from, you can see working two. So interest received are total here in working two. You can see this is $42,000. So we have $42,000. So by adding these two, we get total cash cash inflows from operating op activities. Then we paid cash in several activities. So first of all, we have cash paid, suppliers and employees, which is in working three, and we can check here working three. You can see the total cash paid to the suppliers and employees are one is 2.68 million. So here we have in the inner column 2.68 million. Then we paid cash um, for interest expense as well as for income tax expense. So you can see that we have 38,000 for interest paid and 114,000 for income tax paid. So interest paid in requirement working 4 is total interest paid, which is 38,000, and then we paid income tax, which we have calculated in working 5, it's total $114,000. So by adding all these three, we get total cash outflows from operating activities. So here we are going to write it down with minus sign, minus dollar, because this represents cash outflows, which is 2,832 million. So here we have cash outflows from operating activities. So by adding the two, we get total cash used for or provided by operating activities. Here you can see that $350,000. So this is your total cash provided by, because this is a positive amount. So this is total cash provided by operating activities. So here we have with the, okay. Then the next one is the calculation of cash flows from investing activities. Investing activities. So in investing activities, first of all, you can see that here we have marketable securities, which is debit entry. So marketable securities is our investment. So we have purchase of marketable marketable securities, and whenever we purchase any security, the cash be deducted from the total amount. So here we have marketable securities with negative because we are purchasing an asset, so we are paying cash. The next adjustment, which we have already calculated related to marketable securities, you can see in working. Six, we have proceeds from sale of marketable securities, which is $72,000. So we have not only purchased because but also we sold marketable securities. So proceeds from sale of marketable securities, and this is in working six, and that proceeds are total $72,000. So further you can see that we have in assets, we have loans made to the borrowers. So we have loans made to the borrowers. Here you can see um, we have a debit entries and we have credit entries. So whenever we made loans to the borrowers, we have debit entry, and then whenever we collect these loans, we have a credit entry. So notes receivable, we have loans made to borrowers. So total loans made to borrowers are 44,000, as we have just discussed. We have 44,000. You can see this 44,000. So this we are going to simply deduct, and then you can see similarly we collected on loans, which is 28,000. So collections on loan, which is 28,000. So that would be a positive amount because we have collected this much of cash. And then we also paid cash to acquire property, plant, and equipment, because you can see here plant asset with our debit entry is 500,000. So this debit entry represent the purchase or acquisition of plant asset. So cash paid to acquire plant assets, which is $500,000. So minus $500,000. We have the sign of dollar here. And then regarding assets, you can see that there is a proceeds from you can see this 36,000. So it's related with this 36,000, we have calculated proceeds from the sale of plant asset, which is 24,000. So we also sold plant asset during the year. So we got proceeds from sale of plant assets, which is $24,000, which we have just calculated. So we are going to add all these, and the answer is minus $480,000. This minus means total cash used for investing activities. This means that the company did more investments in the assets. So here we have the total amount is 480,000 minus. It is in minus because the cash is used. Then the next is cash flows from financing activities. This is the last one, and here we have, first of all, we have proceeds from short term borrowings, because financing activities means we are financing our assets by taking debt or loans or by issuing further stock. So, first of all, we have short term borrowings. You can see that here we have notes payable, which is short term borrowings. So here we have proceeds from short term borrowings. Proceeds from short term borrowings. You can check whether we have how much short term borrowings proceeds. Here you can see we have cash. We have notes payable or short term borrowings. We have a debit entry and a credit entry. So we get cash via credit entry. Because notes payable is on the credit side, this means that we are issuing short term, or you can say we are taking loans from short term borrowings. So cash flows from financing activities, and for cash flows from financing activities, you can check we have notes payable, that is short term borrowing. So we have a credit entry of 82,000 and a debit entry of 82,000. So by crediting notes payable means that we got cash against it. So this is proceeds from proceeds from short term borrowing, which you can see that how much we have, $82,000. So this is going to be a positive amount. And then again, payment side, you can see here we have notes payable on the debit side. So if notes payable is on the debit side, this means that the cash is on the credit side. So we have payment to settle, you can say, short term debt, which is 92,000. So we are going to deduct 92,000, and here we have proceeds. And then you can also see that we have ordinary shares. So capital stock is on the debit side, here credit side, and this is the capital stock plus this is share premium on that capital stock. So for this we have calculated, we have already calculated proceeds from the issuance of capital stock, which is $180,000. So what we are going to do next, proceeds from issuance of capital stock, and the calculation is in working 8. So this is total $180,000. So dollars 180,000. And the last thing is dividends. We For this, you can see that retain earnings for para number 9. Here, retain earnings is on the debit side. So this represents, you can say, the dividend paid. Here we have para number 9, $120,000 debit to retain earning represent dividend declared and paid. So in the last, we have dividends paid, which is minus, which should be in minus dollar 120,000. So that's it from the financing activities. We can check whether we have provided cash or used by. So the total cash here it is a positive amount. So we can say that the net cash total cash provided by financing activities are 50,000. So the net increase or decrease would be here, you can say net cash increase or decrease. If the amount is negative, this means that decrease during the year. So this is during the year. So what we are going to do, we have cash provided, which is 350,000. So we have 350,000, then cash used by investing activities, which is 480,000, then cash provided by financing activities, which is 50,000. So we have total decrease in here because the amount is in minus. This means that the total decrease in total cash decrease during the year. The next step here, it is what we are going to do. We are going to add any cash and cash equivalent opening balance. So the cash equivalent opening balance is given here. We have this one. Here you can say at the beginning of the period is $244,000 and at end of the period is $164,000. So opening balance is $244,000. We are going to add it. Here we have $244,000, and when we add both of these, we get $164,000. You can see this amount is the cash and cash equivalent closing or ending balance. So this closing balance is 164,000, and here you can see that the opening and closing balance is given. The closing balance is 164,000, and this should be equal to this amount of cash which we have derived from the cash flow statement. So closing balance 164 and 164, you can see both are equal or both are same. So this is the requirement one or requirement A to prepare a cash flow statement. The next requirement from this problem is to, here you can see that, so the next requirement is to explain the primary reason why. Number one, the amount of cash provided by operating activities was substantially greater than the company's net income. So you can see that the company's net income here $260,000, whereas the cash provided by operating activities are $350,000. So there is a huge difference between these two. So, what could be the reason? The primary reason why the cash from operating activities exceeds from profit was the company's depreciation expense. You can see that the depreciation expense is $150,000. So, this is a non-cash expenditure which has been deducted from the revenue to arrive the net income. Whereas we have added back this depreciation, so that's why you can see that the main reason is the depreciation, which reduces profit but does not affect the cash flows from operating activities. The second is to explain why there was a net decrease in cash over the year, despite the substantial amount of cash provided by operating activities. So you can see that we have cash provided by operating activities are $350,000, whereas the main cash which is used for investing activities. So this is the primary reason for the net decrease in cash, because there's a large amount of outflow in cash due to investing activities. You can see that this is $480,000. This means that the cash is paid to acquire property, plant, and equipment or use for investment during the year. The last requirement is, as 21st century's controller, you think that through more efficient cash management, the company could have held the increase in accounts receivable for the year to 10,000 um, without affecting net income. Explain how holding down the growth in receivables affect cash. So compute the effect that limiting the growth in receivables to $10,000 would have had on the company's net increase or decrease in cash for the year. So we can see that in accounts receivable here, you can see that accounts receivable is increased by 60,000. So uh, to the extent that receivables increases, the company has not yet collected cash from the customers. Thus, if the growth in receivable had been limited to 10,000 instead of this 60,000, the company would have collected additional 50,000 from its customers. Thus, the net decrease in cash would have been 30,000 instead of 80,000. You can see that here we have used this cash in this way. Increase in receivables by 60,000. So if it was just 10,000 instead of this 60,000, this means that simply the net decrease in cash would have been 30,000 instead of 80,000. So that's it from this lecture. Take care, class.